Hello, this is Vince from Sniper Day Trading, and this is the S&P 500 session for Friday. This is the pre-market, and there was some nice signals before the market opened. Just can point those out here. That was the night trading. Pretty wild in there, a lot of big swings, but just taking it from the last of one of those big swings here, you can see the movement up. Here's a new signal long, and there's a signal short, and then there's an add-on signal here that's just before the open. So we can kind of start with taking this is 1 point. If you're just trading, say, 2 contracts, that would be $100. And if you're only if you're splitting the trade up, let's say this is selling half, this would be $50, and closing the other half out of here, 3 3/4, that would be roughly $187.50, something to that nature, for the other half. Yeah, I think that's it. So anyway, nonetheless, the next signal, this is just after the open. This is 1 point, all in, all out, and there's some additional movement, but just this is assuming this could be a typical day. We're not going to be looking to take all these trades. You only really need a few points. 2 to 4 points a day is like what I use as a basic target. So if you're just capturing, this is even after the open, 1 point here, going long here, 1 point there, there's 2 points. So if just trading 2 contracts, that could be 100, 200, 300, 400, 500, and that's just within the first 30 minutes. And if you're trading 3 or 4, it's usually what I trade, then it's about like double that. You can see this is actually a new signal long. I don't have to take all of them, but I'm using some discretion here. This is a new secondary signal. We could have taken this, but that would have produced a point, but I'm not counting that. This would be a new turning point, plus 1 point. There's a signal short. This is just following the indicator for the most part. New signal short. Actually didn't count this. This actually could be, depending on where that entry is, it could be a loss. Pretty close. I'm counting pretty much every signal, every turn. There's a new signal short there for 1 point. Actually, I could have counted this right in here. That would have been a point, but I'm not counting that. Here's a loss. This is a pretty clear signal right here. 1 point loss. New signal short. 1 point gain. There's 1 point gain. And there's more behind it. I'm not counting anything more. 1 point gain, all in, all out. 1 point gain here in the front part. This one here is it's a good secondary trade. The method would say really to stay in this trade for more. Getting out over here just before the turn as it comes into a zero line situation. There's many different ways to get out. This would be the earliest point here to get out on that bar where it turns white up here. And then if you wanted to re-enter, this bar right in here as it's pulling back down would be a re-entry. But here's a new signal long, 1 point. There's a loss right there at 10 o'clock. There's another loss for 1 point right here. Continuation trade right here. This one leaving it all open. This is the only one that I've done that with. This would be the out. Here's an entry, 1 point gain. Doesn't hit the stop there. Leaving the other half on this trade open, 7 points on that trade. And we can use this right here as our exit, and if not, it would have been a little bit lower, would have been the reversal. Here's a few losses in here. Short right here, stopped out. Long right here, stopped out. Long right here, 1 point gain, all in, all out. Or actually, let's see, 2 point, yeah, half, 1 point here, 2 points over here. This here, 1 point loss. The last there, 1 point gain. Getting out over here and then there and so on. You can see the rest. So that's how it was.